Today we're going to talk about tax extensions and what does it mean when you file one. My name is Tony Cameron with TLDR Accounting. We are an accounting and tax firm that helps small business owners file their taxes and get their accounting done in a timely fashion. So the big question today is, we're coming up on the deadline. Are you going to be filed on time or not? Well, sometimes you don't have all of your paperwork done, or you're not ready to file your taxes yet. Maybe all your numbers aren't done. Maybe your bookkeeping needs some cleanup. Maybe you haven't received all the documentation you need and it's now getting closer to crunch time. So you have options. One of those options is filing an extension for your tax return. Now, an extension, super handy. It extends your personal due date from 4/15 to 10/15. Fantastic. But there are some downsides. Just because you have an extension doesn't mean you don't have to pay your taxes. So you can get this extension, which you don't then have to file until 10/15. It needs to be filed before 4/15, and you still need to pay your taxes that you're owed. So even though you haven't filed your return, you still need to come up with an amount to pay for your taxes. The goal being that you pay all of them and you're good to go. And then when you do file your return, say in June or July, that payment, that extension payment you made, covers the amount of taxes you owed, right? Super sweet. It's awesome. But how do you come up with the amount for your extension payment? So at TLDR, we take the information we have, we do an estimate, we suggest an amount to pay, and we're good to go. Now, if you're filing your own taxes, it can be a little more complicated. The easiest way is make sure that you've paid 100% in of the amount you owed on your 2018 taxes. So say total taxes you owed was $10,000 for 2018. Make sure between the withholding on your W-2 and any estimated tax payments, you've paid in at least $10,000. Now, if you made more than $150K, you got to pay in 110% of your taxes last year. So it would be $11,000. Now, you just got to make sure you make that payment when you submit your extension. If you don't know, if you're unsure, there's a different method you can use to calculating it. It's making sure you pay in at least 90% of what you would have owed. Now, that's a much more complicated way to do it. It's how we do it for our clients, but we tend to have a lot more data on hand, and we have tax projection software. So we can plug in the numbers, we can mess around with it a little bit and come up with a number, versus if you don't have that software, it's a little bit harder. My recommendation, 100% of what you owed last year in your taxes. Make sure you've paid that in by the time you file your extension, and then you have a little bit more breathing room for filing your taxes. So if you're still worried, one of the things you can do is set up an appointment with us. We can help you file your taxes. At this time, more than likely, we would suggest that you file an extension, or we file an extension for you, and then we file your taxes in the summer. All right, hopefully you found this helpful and you're not too worried about your taxes for this year.